By what's happening in the derivative space. And you know, speaking of the derivative space and something that Alex alluded to, let's talk about the impact of the new SEBI rules since it's been a month and its expiry date today as well. Remember, the regulator introduced a new way of open interest measurement, and analysts estimated a negative impact on volumes any which ways. So, Sajeet, has that played out?
That's right. Neeraj, what we have seen in the last 5 to 6 days, especially since July 1st, that there hasn't been much of an impact in terms of the premium turnover. Now, that I'm not looking at the notional turnover here. I'm looking at the premium turnover because most of the traders, trade on the premiums, and that's why we need to look at the premium turnover. So, no major impact to option trading turnover, especially premium turnover there, and that's primarily because position sizes in derivatives have been limited in terms of delta from July 1st. Now, what is a delta? Delta is basically denotes the sensitivity of price movement of derivative position with the underlying. So, if you're looking at a long position, a delta will be positive. If you're looking at short, it will be a negative, and then you look at the net position limits based on which you are calculating the delta there. To begin with, to give an idea of the kind of new regulations that came into being, open interest of participants in derivatives are now measured on a portfolio level. What we saw in the Jane Street case was there was huge positions which were getting built up, and that was not being done. So there has been restrictions that have been put in place as a result of that. The second thing which is important is that this is done by computing net delta adjusted open interest in the F&O position. So, if you have position on the either side, then you get, you will net it out, and then you will look at the open interest positions there. And the third one was that, there have been some limits which have been put. Net end of the day futures equivalent of open interest limit for options is at 1500 crores, and for on the either side of the on the gross basis, it's around 10,000 crores. So 10,000 crores if it's on a short, and 10,000 crores if it's on the long side. That's a band which has been kept in. To give a perspective, Jane Street had much bigger amount on either sides, and that also that's why it created a lot of issues with respect to manipulation of options on the expiry day there. So that's one thing. But interesting to note how premium turnover has fared across the stock exchanges, BSE and NSE. If you look at the data which is coming in, it's very interesting that Tuesday is the expiry for Sensex, but BSE's volume was around 20,500 crores, and last Tuesday it's 19,683 crores. So there isn't much of an impact which is coming on the futures on the expiry day for premium turnover there. We saw July 3rd being the expiry for the Nifty, where it was 61,000 odd crores. On yesterday, we saw it was around 32,000 crores. Today is again a Nifty expiry, so we need to see how premium turnover ends up at the end of the expiry on Thursday there. What it does to the market share of both the stock exchanges, BSE and NSE, it's interesting. From last year, when BSE had a market share of 9.8%, that market share has almost gone up to 24.7%, and NSE's market share from 90.2 has come down to 75.3%. Now this is going to change at the end of August because the expiries are getting swapped. Nifty will have a Tuesday expiry and Sensex will have a Thursday expiry. So let's see how this market share remains after August end.
All right, thanks so much, Sajeet, for getting us those details. On to stocks that you should watch out for in trade today, and I've got a few on my list. Asian Paints is one. Of course, there were murmurs of a large deal in AkzoNobel. It turns out